this was a record trade at the time. It was $30,000. So my entry, I got in at 888. So we're looking at around here when the price broke this steepest downward trend line. I went in 20 contracts. I was willing to risk $15,000 if this trade does not work out. Hi traders, welcome back to another episode of Tori's Trendline Trades. Today we're going to be going over a 3 touch point break. We're going to go over the playbook, my criteria for entry, my entry itself, my exit, where my trend lines were, where my key levels were, my horizontal lines, support and resistance. And before we do, I always make sure I want to start with, I say always, this is literally the second video, but I want to start this video with showing you guys my brokerage statement for the trade that I placed, just to make sure that you guys can see the validity, my credentials. I am verified, and we'll get into it. So let's start with my TradeStation statement for February. I'm going to start by logging into the Client Center of TradeStation. There we go. All right, here you can see this is the statement of February 29th, 2024. You can see my account number, and here we go. We have the beginning balance is $123,000. The net futures profit and loss is $29,785. And then you will see there is actually an open trade in the negative $4,000 as the statement closed. So that is unrealized, but the realized profit and loss for the month of February is $29,785. This is the one trade that I did place in February, and this is the one we are going to go over. All right, so we're going to start by going into my TradeZella. This is where I can journal everything. This is where I can dissect everything. I can go back through and recreate my trend lines. I can see how many contracts I traded, how many points, how many ticks, my commissions, my net ROI. I can see how much I was down, how much I was up. I rate my trade. I gave myself 4 stars on this trade. You can see my risk on this trade. You can see my R multiples. It was 1.9. And then the coolest part is you can tag your setups. You can tag your mistakes. You can also see all of the notes that I gave myself for this trade, and the running profit and loss, how much I was down, how much I was up. So we're going to start by going through the notes so that I can also remind myself what was going on, what was happening here, what was the mindset. And then I also have a playbook that I want to run you guys through as well. When you add a playbook to your TradeZella, you get to check off, first of all, the satisfaction you get from checking off a box. When I tell you, that is so satisfying. And then seeing this 2 out of 5 checklist did everything align. It's the coolest. But you'll see the playbook that I have here. This is a 3 touch point break playbook. And then these are all of my entry criteria, my exit criteria, and market conditions. And then we will check these off as we go through it. Okay, so first let's go through my notes just so that I can refresh myself on what we're going to go over. So this is the second trade of the year. This is my true 3 touch point breakout trade. Overview, I'm giving myself 4 stars on this trade, largely due to the breakout of a 3 touch point trend line. While the trend line did not have as much data behind it as I would have liked, only a week's worth of data, it still met the criteria. When I say that it doesn't have that much data behind it, it just means that I don't have that many candles, that many bars, that many days behind this trend line. So I did get 3 touch points, but those 3 touch points were all within a week. I usually like to see weeks worth of data. I mean, if not more, months worth of data. The touch points that you get on a trend line over the span of a month, a few weeks, a few months, it holds so much more weight than just simply a week's worth of data with the 3 touch points. So I still checked off my criteria, but it just didn't have as much data behind it. The setup details. This was a trendline break. I entered on a trendline break with 3 touch points despite the limited historical data. Position size. I came in heavy. With this position. I turned it actually into a higher risk trade. So I could have made this a low risk trade by simply reducing my position size, but instead I actually did the opposite. I came in heavier. This trade was my record trade at the time. When I closed this trade, that was the most I have ever made in a singular trade before. This was $29,871. It was very close to $30,000. And to be honest, I probably thought I made $30,000, and I probably closed it when it said $30,000, but the difference between spread and commissions brought me down to $29,871. Okay, let's go over where I entered this trade. we've got a few downward trend lines here. We've got this higher time frame trend line starting all the way back from the very end of 2023, then coming in with a second touch point here at the end of January, very end of January, January 31st. So 2 nice touch points here. And then I decided to come in steeper, track price steeper and steeper. So we've got yet another steeper trend line here. This is the 3 touch point trade. So I'm going to zoom in now so you guys can see where these higher time frame trend lines come in. But now let's zoom in and get a closer look at this trade. So when I decided to come in steeper, this trend line here, when I am coming in steeper with my trend lines, I always want to use previous touch points so that it looks like this fan. It looks like a fan of downward or a fan of upward trend lines. So I'm always using previous touch points to continue to track price steeper and steeper. So when we came in with this steepest trend line, this was the 1, 2, 3 touch point trade. Almost 4 touch points, but not quite here. So we've got 3 touch points on this downward trend line. We've got the entry based on the break here. So my entry, I got in at 888. So we're looking at around here when the price broke this steepest downward trend line. So far, we can go down and check off our setup. 1, we did have a trend line break. 2, this trend line did have 3 touch points. But now 3, this was a high risk trade. When I get into a trade and I am calculating my risk, the risk trails. It always trails along the opposing trend line. But my initial risk is if I get into a trade and the price immediately goes against me, that's going to be my initial risk. But the risk will always trail. It continues as price progresses and continues in my favor. The risk becomes smaller and smaller and smaller and smaller. Eventually, risk will be in profit if price does continue to trend in my favor. But the initial risk is what I'm always going to be showing you guys. So if I get into a trade, immediately it goes against me. This is the amount I'm willing to risk on the trade. So first things first, we entered at 888. I went in 20 contracts. I was willing to risk $15,000 if this trade does not work out. Now, before I start, I do want to go through my initial balance so that I can see the percentage. My beginning balance when I got into this trade was $123,000. So Alexa, what percentage is 15,000 of 123,000?
15,000 is 12.2% of 100.
Dude, I've been heavy on the risk. Both of these trades are very risky. Came in real heavy. Now, if you guys saw my previous video where I broke down my first trade of the year in platinum, I made $10,000. There was an area or an opportunity to cut my risk in half, and I was presented with yet another opportunity to cut my risk in half. I did not. So this year, I am trading bigger position sizes, and I'm willing to give up more to see this thing through, my boy, if you get what I'm saying. I could have mitigated my risk more in this trade initially. So let's try to break it down. I'm going to try to make sense of this. It's not going to flow beautifully, but I just want to show you guys what I could have done a little bit better, what I did instead, and what happened during this day. So the entry here, now it says that it's a day later, but I entered at 888, and this bar didn't even make it to 888. So I'm almost certain I entered at this bar here. This may be also because I had bid adjustment toggled on. I've been experimenting with the bid adjustment. If you guys trade on TradingView, you know there is a bid adjustment for the futures market, for futures charts that you can toggle on and off. And it simply just helps with when contracts change from one to the other after it expires. It helps with the gaps, and it helps create this easier flow of price instead of so many gaps. And when I'm trying to track price with trend lines, the least amount of gaps I get, the better. So I'm still experimenting with that. If you guys have any advice or have any insight on the bid adjustment, the pros and cons, I'd be fascinated to hear it because I'm still experimenting with it to see if it helps or hurts my trading. But so far, it's been mostly positives. So we've got the entry of the 3 touch point break. How could I have risked less in this trade? My initial risk was $15,000. How could I have cut that in half? Well, let me show you. So speaking of capital, your digital footprint is capital. And the amount of scammers and spammers out there, they are truly trying to steal your capital. And if you guys know me, which some of you guys do, if you know, you know, my number 1 rule is capital preservation. And your personal information is no different. That's why I use Surfshark. Surfshark is a VPN that protects all of your online activity and encrypts your personal information. I'm talking about banking info, files that you send and receive, and even the questionable search history. Don't act like you ain't got it, because I know you do. They offer over 3,200 servers in over 100 locations, which makes it easy to use from anywhere. Plus, they have 24/7 customer support and a 30-day money-back guarantee. Also, if you guys go to surfshark.com/Tori Trades, you'll be getting 4 months of extra protection with Surfshark for free if you use code Tori Trades at checkout. I could have came in with another trend line using this last low, come up here, using another touch point here. So I could have came in with this last low, this pullback here, and then my risk only would have been, let's see, it would have been around 879.30. So if my trade wouldn't have worked out, my stop loss would have been around 880, we'll say 880.40. I would have been able to only risk $8,000 for this trade. That would have been best case scenario, but that would have also been a loss. So if I would have gotten in because of the break, I would have also been stopped out. That $8,000 would have been hit. I would have closed this with a loss. So there was a benefit to risking more because it kept me in this trade. It ended up pulling back. Now, why did I stay in this trade? So let me kind of go over where my initial risk should have been, where it would have been, and where it technically was, and why I ended up holding and risking more and using my original trend line to mitigate my risk instead of this steeper trend line. So when the price came down, you see this giant red bar here. We had a news day, price moved pretty quick, pretty far, and crossed my steeper trend line within the day. To be honest, within a few minutes. And I was willing to go ahead and let it come all the way to and break my original line, which I'm going to scoot over here so you guys can see a little bit better, my original upward trend line in order to take this loss or solidify this loss. So now I'm going to change this trade risk to this original upward trend line, ever so slightly up. It almost looks horizontal, but this is an upward trend line that's drawn from a higher time frame. But we created a third touch point here. When I tell you I was sweating on this news day, I was sweating on this news day. The price came down and literally kissed my upward trend line, created yet another touch point on this upward trend line. My stop was on the other side. If the price was to get to this 873-ish area, give or take a few cents, I was going to be willing to solidify that loss. It would have been around $15,000, 15.7 to be honest. So this steeper upward trend line, I said, delete. I'm going to let this higher time frame line mitigate my risk and dictate my exit. So I held. Okay, so price created another touch point on this upward trend line, and then immediately the days to come, the days after, sense of relief. We got an upward bar, we got a green bar, we got another green bar. We are continuing to break these steeper downward trend lines. We got a sense of relief after every upward bar, after every green bar was coming back in our favor. So we're getting out of drawdown, bar after bar after bar. Price is continuing up now. Now let's go over the exit. I closed my trade at 918.62, this horizontal level here. Now let's zoom out and see how many touch points this has. So the likelihood of platinum to touch this key level, to touch this area of either support or resistance, depending on which side the price hits it on. The likelihood of the price of platinum getting to this level and then turning around was fairly high. So we've got a touch point here. I'd say we've got a touch point here. Now close enough over here, price hung out around this level. Price touched it again here. So we've got a few solid touch points and then a few areas where price just really hung out around this area, and especially over here. So the price got to this level and then did truly what it was supposed to do, bounced off, rolled off, rejected it. Now it did pop through it, and I'm sure a lot of people thought, oh, this is it, we're going. My entries are not based on these horizontal levels, simply my exits are. Now I do use these horizontal levels as confidence, as confirmation for my entries, but I do not use these solely for my entries. Exits, yes, all day, love it. Best case scenario, I am exiting because of a break of a trend, but if I am exhausted, I'm done with my trade, and I'm looking for an area to close it as soon as possible, an area of support and resistance or these key levels is going to be next best scenario. So I closed my trade simply because it got to this level here. Okay, so let's go over the executions here. I entered my trade on February 12th, and then I closed my trade on February 20th. This was a net profit and loss of $29,000, $30,000. Now, if you want to kind of bring this down, scale this down a little bit, if you were to be trading 10 contracts, you would have made $15,000. If you would have been trading 5 contracts, 1 contract. So you guys can kind of scale that down yourselves because I literally have math stage fright, to where I can't do math when I'm recording. So, and let's be honest, I really can't do it even when I'm not recording. So I went long right here on this bar. Price is coming up, boom. long position here. Now we're feeling good. Okay, we're going sideways. We're not going anywhere. We're feeling really good. And then boom, one big red bar. Now, if it would have broke, that would have been a loss. That would have been my $15,000 solidified loss. Price does such a sporadic, hectic move on a news day that I had the guts to hold through it and let this original line dictate staying in. I was willing to let price settle since that was such a big move, and it did. It made a sporadic move down, aggressive, steep, big, and then just puttered out, and then we're back to our average price action. Boom, normal movement, normal movement. Okay, I'm going to do one more trend line or one more example to show you guys if I would have closed based on a trend line instead of a horizontal line, instead of an area of support and resistance or a key level here. My exit would have actually been, okay, I would have used the last low here, touch point here. I would have tracked this steeper, touch point. So I could have waited until 9:05 to close my trade, which would have been 888 to 9:05. Still a good profit, but I wouldn't have been able to maximize and get the most amount of this move here. So yes, we've got an upward move. It's not the most beautiful. It's not one of these or one of these, which is what I wanted so bad. I wanted a beautiful move like this, a beautiful move like this. I didn't. I got a mediocre ebb and flow, up and down, ever so slightly, not as aesthetic upward move here. I still got it. I still was able to get in on it, even though it wasn't much of a move. It wasn't the one I was expecting or the one I was wanting. And for the most part, I want to let you guys know that that truly is why I was willing to risk so much for these trades, because I wanted to catch something like this. I wanted to catch something like this. This upward move, this downward move, but that's just not what the market gave me. The market didn't make one of those big moves, which I wanted on the previous trade that I'd went over before this one. I wanted one of those big moves, but it's just the market wasn't giving me one. So I was willing to risk a little bit more in order to be in on a move like this in case we were in one, but we just weren't. We weren't. I was up 30,000. Price got to this horizontal level, this key level here. I closed. If I wanted to stay in this for a little bit longer in hopes that maybe this was going to be a move and maybe I was willing to give up some of that 30,000, then I would have closed around this 904, 905-ish area when price broke the trend that it was trending along. But I'm going to delete these upward trend lines now since that's not what I used to close my trade. It wasn't what I used for my exit. I used this horizontal level here. So let's go over the playbook first and foremost. So I'm zooming into the trade here. I'm going to my playbook here in TradeZella, and these are the criteria that I gave myself for this specific playbook. This is the 3 touch point break playbook. So I got 2 out of 5 of my checklist. The trend line had 3 touch points. Love it. I could have checked off this low risk setup if I hadn't come in so heavy in position size. So I came in 20 contracts versus my 10 contracts, so I wasn't able to check off this low risk setup. If I did, I would have been able to check that box. Okay, exit criteria. Was the opposing trend line crossed? No. Was a support and resistance level hit? Yes, I was able to check off that one. Okay, so market conditions. Are we in a trending market? And the answer was no, we were not. We're actually in consolidation. So I was able to capitalize on a long position on an ever so slightly upward trend. It didn't last very long. We just weren't in a trending market at the moment. This right here is an example of a trending market, getting in on the current trend. The trade that I took was not within a trending market. It ended up going sideways for actually a week or so after I even closed the trade. So we were actually in consolidation when I placed this trade, so I didn't get to check that box off either. So in my playbook here, I was able to check off 2 of my boxes here. 1, that the trend line had 3 touch points, and 2, my exit criteria was hit the level of support and resistance. So that is my playbook here for the 3 touch point break. And then let's go down to the stats here, and we can see I labeled this a trend line break. I also labeled this a high risk setup, and I also labeled this a 3 touch point break. Not only was it a break of a trend line, but the trend line had 3 touch points and it was higher risk. I could have made this lower risk. I could have labeled it low risk if I had reduced my position size, but I didn't. Now here's the mistake. I held through news. The news day created such an aggressive move, one that made me sweat and one that made me resort to a higher risk trade and a bigger loss if the trade did not work out using a less steep upward trend line. Okay, and then here's my running profit and loss. Closed that bad boy at $29,000. $29,905 was the gross, I believe. Okay, missed opportunity. I missed the short position earlier in the month, but I'm glad I was able to capitalize on this trade instead. And then the last thing is exhaustion factor. So holding trades over the span of a week and being in X amount of drawdown and then being back in profit, it's just seeing those numbers fluctuate and being in for a week, give or take a few days, more or less, could very well dictate closing early, not staying in for the entirety of the move. But I will say overall, this trade was solid and it ended with a record profit. So I'm happy with this trade. I gave it 4 stars, mostly because of the entry criteria, the exit criteria. I'd say the downsides to this trade were that I came in too heavy. You know, even though I made 30 grand on this trade, if I really wanted to give this trade 5 stars, I would say it would have ended with a $15,000 profit and reducing risk initially. So coming in lighter in position size. Okay, so all in all, this was a record trade at the time. It was $30,000. I'm sure you guys have seen me post that trade all over the place. I was super proud of it. All right, guys. Well, that was your trendline trading tips of the day. Thank you guys for hanging out. And don't forget to like, subscribe, hit the notification bell for any new videos that I have coming up. And I will see you guys in the next one.